today during London session. Yeah. Okay, while entering the market, I made a video on how brokerage manipulated this market, because if you look down here, if you look at this London time, so 10 p.m., you would see there's a bullish candle here. But if you go to a different Euro USD pair, you'll be seeing a bearish candle there. You can see the time 10 p.m. London time. So this would have been a beautiful order block entry if I saw this, like if I wanted to enter. But because of this manipulation, I totally stayed away from the market, which was a really good decision on my part. But let's go to a 15 minutes time frame, and you see something beautiful that happened here, that turned my certainty to disaster. So you can see here, although normally, yeah, I don't really trade this order block, this kind of order block, because it did not really take out a swing low. Despite this took out a swing low, this would have been the perfect order block for my entry. But nevertheless, the thing still got destroyed. The market still destroyed it. So look at this, and look at the different Euro USD pair. Oh, sorry, look at the different Euro USD pair. You can still see this same order block formed here. This same order block formed here. Here. Oh, okay, this is USD X. I'm sorry, I was very confused. But okay, you can still see this same order block formed here. This same order block formed here. And look at this. If this was going to be an entry, which it wasn't, and I wouldn't have still entered, because I've seen multiple times that this kind of order block don't get respected. So there's no way I would be risking this order block for with a low certainty, yeah, over time. So I'm not still saying that I didn't enter the market, but if we were pursuing these highs here, then we'd have gotten at least a 1:3, which is usually our normal risk. If we were pursuing this high here, I've gotten a normal 1:3. So it's still the whole idea of the strategy and order block, then to the liquidity, to the next liquidity. So that's it. So to show you what I was talking about earlier, let me show you the two Euro USD pair, so that you won't get confused later on. One belongs to Forex.com, and then the second belongs to Euro FX. It should be showing here. Well, the other one belongs to Euro FX. So, but I normally focus more on the Euro FX because it has more certainty over time. With experience, I can tell you that Euro FX has more certainty to this thing. But nevertheless, we are re-entering this market, but not as a buy anymore, but as a sell, because of this swing high has been taken out. This swing has been taken out. So what are we expecting this market to do? We're expecting this market to drop into a retracement, to retrace and then shoot lower, because what I'm marking here is the OTE level. These are key levels: 0.79, 0.62, 0.5. These are OTE levels. So what are we after? Let's go to a 1 hour time frame. I want to show you guys something. So this 1 hour time frame, you can consider this to be an order block. Let me delete this. I'll reinstate it. You can consider this to be an order block. This, because after this market took out a swing high, the market still came down lower to take out the swing low here. So definitely this should be an entry level, but this entry level is way too large. It's way too big. It's way too big. All right, so this is actually way too big, and this it. So if we are pursuing a lower this thing, a lower exit level. You see, before we even get to this other block that will possibly serve as a distance, will possibly serve as a retracement level, yeah, or a rejection level. The market had only given us a 1:2, whereby we usually look least at a 1:3. So let's go down to a 15 minutes time frame so that we can shorten the plane for an entry. Look at this. If you look closely, you can see. If you look closely, you can see this fair value gap, and that is where we are entering the market from. You can see this fair value gap here, and luckily enough, for a confluence, this fair value gap is rightly seated at a premium level. At the premium level, this is where the Fibonacci comes in now. It's rightly seated at a premium level. And when you look at this, you can see this fair value gap there. So what we do is to adjust our entry to the fair value gap, and doing that, we are already getting a 1:4. 1:4. So it's just advisable for us to shift this little bit because the market can be funny at times, and that's like a terrible sense of humor, yeah. So that's what we are looking at. I kind of entered this market already, but we are waiting for the market to trigger. So what we do is we adjust our stop loss to this swing high here. We adjust our stop loss to this swing high. That's giving us like an 11 pips. 11 pips stop loss to get whether a 1:3 or a 1:4. No matter what your take would be, that's okay. But now will be giving us a feedback on whether we got a loss on this or a profit. Alright, so that is what happened with the morning hours of the London session, and how the market almost manipulated us and we didn't catch this, and how we are also looking for this. So safe trading, guys, and I wish us all the best of luck.